Hey guys, hope you're doing well. This is HTrade. So currently I'm looking at the charts because I want to see if I can get the London session trade. And to be honest, since yesterday's dip into this daily inverted fair value gap, my thinking was because price yesterday did not completely take out the previous daily high 100%, because that's why I still have this marked out here on my chart. And I thought to myself, since it took out the previous daily low, we dipped into this liquidity area here, which is the daily inverted fair value gap. I thought to myself, I wonder what price is going to do next, because the bigger traders out there, they all make use of the fib tool when it comes to where they want to take their trades from. So if, right? So trading is always a probability game. But I'm going to say this. If someone wants to buy, where do they buy from? They buy from discount and they sell from premium. So that's why I have my fib tool drawn up here to see if I can get a buy from here. But enough about that. Let's get to yesterday's movement, because I want to do a quick trade recap from yesterday. See what happened there. So, right, so I'm going to delete this. I'm going to keep everything as is. I'm just going to literally take the replay tool and I'm going to delete this day completely from yesterday. Right, so now let's get started. So let me just quickly start my replay from here. Asian session opened. Remember, we're coming from FOMC movement from Wednesday, right? So FOMC movement, what we did was we took out the previous daily low. We made a reaction. We had a 15-minute inverted fair value gap. We reacted from it and we launched up into the sky like it's crazy, right? Very, very cool movement. I like it. Now we are at the top. We barely touched this daily fair value gap at the top here. And we haven't touched that yet, right? But in any case, so let's just move forward. Let's just do a few candles. So during Asian, I was sleeping like, I mean, obviously. I live more during the London time frame. So I'm more awake during the London time frame. That's what I'm trying to say. So during Asian time frame, what did we do? We actually tapped this 4-hour fair value gap from this side here. We took out the previous daily low. We tapped a daily inverted fair value gap, and all those big higher time frame confluences together made this move, right? We went steadily up, steadily, right? And I was looking for a buy during the London time frame, but I did not get that buy. I was planning the buy, but I missed this buy. I think I explained it in my previous video. I explained that in thorough detail in my previous video. So I was planning a buy. I was planning this buy 100%. And during that time, I got busy with my own work. But when I eventually came to, I came back to the charts. We got this move up. And I was looking at the charts here. I was looking to take a buy from here, but that's, I mean, we haven't fully reacted from this level yet. So yes, we did get a reaction from it, but I was looking for something better. So then again, the lows were swept again. Here. We got a reaction, we retraced, and boom, price took off. So, Yeah, I missed that London move. I really missed it. It just went. So let's get back to the 15-minute time frame. That's not the move that I want to show you guys. So remember, New York Open is 9:30. So price went up. It just shot up. I mean, I missed a beautiful buy. It is what it is. Come New York. So if I ask you guys once again, what do big traders out there do? Big institutions, what do? They use the fib tool on higher time frame movements. What did we do? We tapped the 61.8% retracement level. That's what we did. What happened after that? Boom. We got our reaction. We got our reaction from the 61.8% fib level. That's it. That's it. What else can I say? What else can I say? Right? So, let me just quickly replay one bar back. So, I was looking for what to do, because remember that I was at that time, I was in New York time frame. And I was looking for a trade. I didn't know in which direction. I knew that price was reacting from the Fibonacci retracement level, 100%, but I didn't want to sell from the beginning. So what did we actually do? So we had the New York Open, 9:30. We reacted from this 15-minute inverted fair value gap. We got the most beautiful sell of this 15-minute inverted fair value gap. You could have taken your sell here. Could have placed your stop loss above the candle that created the fair value gap, and you could risk 1 to 2 risk to reward. You can aim for London low, the current London low, and that would be a safe take profit to get. And then you just wait for the next movement. That's it. Scalping. That's what I do, right? So, and then price did the following. We went back into this daily inverted fair value gap. And guys, I need to just mention to you guys once again, this is a higher time frame confluence. So we went back into the 50% level of this daily inverted fair value gap. And what did price do? The following. It did the following. So I was from this stage on, I was already tracing the fair value gaps to see, all right, cool. We got a reaction from CE. We sold off. All right. And then I saw this. I thought to myself, listen, something big might happen again if we tap this daily inverted fair value gap again. And then this happened. Boom. I was in for a buy. Just like that. I did not even wait for a retest. I put my stop loss here, I think. And I aimed for 2 to 1 risk to reward. Because we have our inverted fair value gap. We closed easily above that. We created a new bullish fair value gap as well. There it is. And boom. We went up into the sky. And I took full profit, take profit. And then I thought to myself, what do big institutions do? Another motivation for that move is the following. From the high to the low. Confluence to the TP that I wanted to take is this. So here is the 61.8% and the 50% fib level retracements. That's it. That's, guys, it's literally, if when it comes to a range, like we're in a small range that right now, right? We're in between a daily inverted fair value gap and a daily fair value gap. We're moving in between these areas. So when it comes to a range, you buy low and you sell high. That's it. That's all you do, literally. And you wait for your entry model. In this case, the entry model was there, but we haven't made a retracement. But I thought to myself, listen here, where is price reacting from? A daily confluence, a higher time frame confluence, a big higher time frame confluence. and that is what that is what price used as fuel for this movement up. And wouldn't you know, after we went to a 50%, 61.8% FIB retracement, what did we do? Price started going up and down. And then I got this beautiful sell here. So I waited for my retracement, and wouldn't you know, where did we react from? 15-minute inverted fair value gap. There it is. And boom, we got another sell. And I think I took $680 with this move up, and I took like 120 or 130 with this move. Just a quick one-to-one risk to reward. In this case now, it was a proper inverted fair value gap. I'll just create it here. There we go. And we got a 50% retracement back up into this, almost into this fair value gap, but we did into this fair value gap, and we did not close above it. So when we closed below it, I knew, all right, cool, I'm safe to take my sell from here, and we took the sell. And yeah, that's my movement from yesterday, guys. That's it. That's literally it. And as you guys can see, with every single trade that I do, I make use of my higher time frame confluences, because the single most biggest moves come from 4-hour movement, 4-hour confluences, daily confluences, weekly confluences. The biggest moves that you can possibly think of come from those confluences, as well as daily highs, daily lows, retracements, when we take out that as liquidity as well. So let me show you my results. There we go. And yesterday, let's go back to yesterday. So this was the move. You can clearly see I'm not talking bull crap, yeah. And I exited 700 and something. And then minus commission, obviously, I got to 686 profit P&L at that moment in time. And then after that, I took another sell, and my total P&L for that day was 800 and something, 820 or something. So then my total balance for that day was 51,308. And that's beautiful. That's really beautiful. So I'm getting back on track on what I need to do, and my emotions are in check. So yeah, I'm doing much better than what I did about a week ago. So yeah, just to show you guys, since the starting of this journey, and just before I started documenting this journey, this is the amount of times that I've so far failed and had to renew the account. 50,000 US dollars. All right, there we go. This is my renewals. This is the 4th time now that I'm renewing this account. But think about it this way, right? Think about it this way. One singular payout. You make all this up, back, and extra. One payout. One payout, guys. One singular payout. So all I'm saying is, don't lose yourself once you've lost the account once. If you have broken the rules and you lose the account, you reset. Lose, reset, lose, reset, lose, reset. This is now my 5th time that I'm resetting this account. And I can guarantee you guys that my emotions are much better in check. I can't guarantee you that I'm going to pass it. I mean, like I said, there's no guarantees in trading. It's only a probability game. But I can guarantee you that my emotions are now much better in check, and my stats are showing it. My trades, where I take my trades, are showing it. The amount of trades that I'm taking is showing it. So all we can do is improve ourselves, get back on track, and just take it day by day. I remember when I renewed this account on the 9th of December. So the first trading day that I actually took was the 10th of December. And I had a loss day that day. I lost like 400 and something dollars, $480 or $450 or something like that. And then I stopped for the day. That's it. Boom. Sorry. Done. You move on to the next day. 9 December. Sorry, I renewed it on 9 December. So my first trading day was 9 December, right? Okay, cool. So last day. 10 December, which is the next day. 900 and something PNL. 997 PNL. This was the 10th. There we go, the 10th. 10th of the 12/25. And I got back up. There we go. 54.90. 504.90. Beautiful. Next day. Okay, 686, but I ended up with 820. And got back up 51,308. And that's where I am right now. So what I'm saying is, when you lose, you need to stop. When you lose the amount of risk that you put out for that day that you want to trade, you stop. You do not let your emotions get the better of you. Even though you took one trade and you lost your full risk amount for that trade, for that day, you're done. You don't even move to New York. If you take that trade during London session, you do not even move on to New York session. You move on to the next day. All I'm saying is don't be a hero. Because at the end of the day, if you try to be a hero and you want to be right, and if you want to be right, you're going to lose. Because the market is always right, not you. Not your strategy, not your risk management, not what you think, but the market is always right. And the market will always show you the middle finger. If you think you are the best thing that's ever happened to trading, you are going to see your ass at the end of the day. Not many traders show you the amount of times that they reset their prop firm accounts, right? They always show you the wins. They always show you those 1 to 5 risk to reward trades. They always show you those 1 to 4 risk to reward trades, those profits that they make. In the meantime, this is what happens in the back end that they don't show you. So just think about that for a moment. All right, I'm done. Today is Friday, and this is currently London session. So let me just quickly go back, because I was actually thinking about what I'm going to do during London session. London is going down at this moment, but let me just quickly check and see what's going on here, right? So let me just quickly give you some early analysis here. So on the right hand side, daily time frame, where are we right now? We are here, right? But where are we as a whole? So this day have been going up and down, up and down, up and down, up and down. So we are in a small range, a very small range. But we are traveling between this fair value gap and this fair value gap, daily inverted fair value gap. So now let's just put the previous, this is the previous daily candle body high. And I think I delete that other line. And this is the previous daily candle low. All right. And this is the actual previous day high. And this is the actual previous day low. This is the daily inverted fair value gap. I'm just going to remove that because this line is in the way there. And I'm going to show you guys where are we on the, let's take a look on the 4-hour here as well quickly. Do we have any 4-hour conferences that we can add to our chart at this point in time? Not really. We have an order block here. So price came down, price came up, price came down, price came up, went all the way up. So this is an order block right here, right? 4-hour order block. And this fair value gap stops here because we already closed below it. So we can't really make use of that fair value gap anymore. All we have now to look out for is this daily inverted, these daily conference, daily fair value gaps. Let me just quickly delete this FIB tool as well. And now, since we have all of our higher time frame conferences in order, we go and take a look at Where are we right now on the time frame? Let's make it the 15-minute time frame. Where are we now on the 15-minute time frame? We are here. We are literally in the middle of nowhere. We're literally tapping into yesterday's New York movement. We are here. There is a bullish fair value gap sitting right here. We haven't closed below it yet. There's a possibility we could have a reaction from here and then start going up, and then we could check out the daily candle high, possibly previous day high. The SPDH, sorry, the SPDH. But we have an opening gap here. So my thinking is that if people want that as liquidity to be taken, what happened the previous day? We went down, we tapped this daily inverted fair value gap, we went up, but we did not take out the previous daily. We didn't take out the previous daily high. This day's high. We haven't taken that out yet. So what does this mean? Possibility price could react from here somewhere and start going up and then take out this as liquidity. And how would we know more or less to where to look for a buy? So my bias right now is to look for a buy, right? My own personal bias right now at this point in time says I want to look for a buy. So if I would like to look for a buy, where would I buy from? I would buy from discount. That's why the FIB tool would be the first tool that you always draw up. Now you look at between the 50 and the 61.8% level. Are there any confluences here that we can make use of for any motivation for you to look for a buy? I would say there is a here is a 1 hour inverted fair value gap. That's something. Very, very small. Very small hourly inverted fair value gap. Very small. Right there. Okay. Yeah, well, price is dumping right now like a mad thing. But don't let that fool you. Right? Don't let it fool you. Let's just move on, because what price actually did was price started reacting from this daily, from this hourly fair value gap, reacted from it, closed below it, and then start going down, right? So don't be worried about that. It is what it is. Nothing you can do about it. Now let's go to the 15-minute time frame. Remember, we're looking for motivation. So if I want to buy right now, where do I want to look for a buy? So if price is not going to respect this 50 to 61.8% FIB level retracements, what would it respect? If it's going to go down, it might tap into this daily inverted fair value gap again. Then there's a possibility that we might only get a reaction from here. So then my idea for looking for a buy now would be absolutely worthless at this point in time. So then all it means is that I need to have patience and I need to wait. So if price is going to dump all the way down into here, hands off. I'm going to have my hands off. You're probably going to ask me, but why don't I want to sell? Why don't I want to just look for, let's see if there's a new fair value gaps that been created here, price. Tap into this fair value gap and look for a sell into this daily inverted fair value gap. 100%, you can go ahead and do that. But yesterday we reacted from this daily inverted fair value gap. We went up and we did not take out the previous daily high, that day's high. So yeah, my own personal bias is looking for a buy right now into at least this gap right there, which is the current Asian session high. In any case, that's my idea. Hope you guys have a great one today. This is today's Friday, like I said, and coming up next after London session would be the New York session, and yeah, I'll probably post something on Saturday for what happened during the New York session. So, hope you guys have a good one. Cheers.